Okay, but let's talk about the Johnson family. Okay, they're going to get their W-4 form. And the first thing that the Johnsons should do is look at page 1 and read the purpose of that form. It says complete the W-4 so that your employer can withhold the correct federal tax from your pay. If too little is withheld, you'll generally owe. If too much is withheld, you'll generally be due a refund. Complete a new W-4. When changes to your personal situation would change the entries on the form. For more information, see the withholding and when you must furnish a new W-4. So they tell you right up front. But on the first page also, you'll see something when to use the calculator. We just want to use the calculator all the time, regardless of your status, regardless of anything, because it's a way of double checking and keeping a record of where you stand during the year. Okay. Again, we bring up their paychecks, and we're mainly concerned with their current rate of income, the current amount of money that's coming out on the federal, the year to date, and also I like to look at the year's the year-to-date gross, okay? But again, I want you to pay special attention because if you look at that list of deductions that come out, Mrs. Johnson has $455 coming out of her check every 2 weeks. Mr. Johnson has $401 coming out, which is a total of $856 coming out of your household. Just because you went to work and you got a paycheck, somebody's going to get almost $1,000 out of your money before you even see it. Okay, that should make you a little mad. So we're going to bring up the estimator. And what I like to do is bring up the estimator here. Click Use the Estimator. And I created a form that I was able to show for the entire year what those amounts would be. I got it broken down into quarters. So in this example, we are now in the fourth quarter from October 1st through December 31st. So these totals are not yet good. They won't be good until the end of the year. Okay, so we're going to use the totals from the third quarter. Okay, as we fill out that tax estimator. In the very first section is information about you. Okay, as we said, they're going to be married filing joint. And the IRS says, do you or your spouse have a job that regularly withholds federal income tax from your paycheck? That answer is yes. And then they give you some demographics. Okay, will you be 65 or older? In this case, no. Will your spouse be 65 or older? Continue with the no. Are you blind? Is my spouse blind? Then it says, I can be claimed as a dependent on someone else's tax return. No, this is not the case here. But the next one says, I plan to claim dependence on my tax return. So in this case, we'll definitely say yes because they have 2 kids. Okay, we all know this. Okay, then it's going to ask you about your income and withholdings. So it's the first question says, how many jobs will you and your spouse have this year in which federal tax is regularly withheld? Okay, they give you the one, but we're going married filing joint, so there's 2 jobs in this household, so you got to put the 2 there. It's an hourly job, and he plans to hold it all year. Okay, now there's other situations there that might apply, but for our example, Mr. Johnson's going to hold his job all year, and he gets paid every 2 weeks. Okay, using your most recent pay stub. Okay, so we're going to go to September, and we're going to go to September 15th, because if people get paid twice a month, typically they're being paid on the 1st and the 15th. So we're going to take September 15th as the latest paycheck that we're going to work with. Okay, and it says select the option that best describes your current situation or your spouse's current situation. Okay, the very first one says the last paycheck was a good representation of how much you're going to make on an average pay period. So that's true. Okay, first thing it asks you, enter the wages per pay period. So you want to go to the gross amount, that 2083, and enter 2083 in as a gross amount that they made per paycheck. It says enter the wages earned year to date. So we'll go to September, year to date, 37.5 is what he made there. So we'll pick 37.5 here. And then it even checks it for you. It says, based on the information provided, it looks like your job has an annual income of $52,081. Okay, we said 50, so 52,000 is wrong. Okay, Mr. Johnson is making 50,000. So somewhere along here, there's a mistake here. Okay, so let me find out where that mistake is. On the 15th, the wages paid per period is 2083. And into the wages earned year to date, 37.5. Okay, did I go there's a mistake right there. I went every 2 weeks as opposed to twice monthly. There's a difference. Every 2 weeks, you have 26 pay periods during a year. If it's twice monthly, you have 24 payments during a year. So that's where the mistake was. So it checked and let you know, if it said 52,000 and you made 50, somewhere along the line that you did something wrong. Okay, so here we go. Now that it's corrected. It says, based on the information provided, it looks like your job is paying $49,998. That's $50,000. So your answer is yes. Okay, then it says, enter the federal taxes paid per pay period. Federal tax per pay period, $131 for Mr. Johnson. And it says, enter the federal taxes paid year to date. In September, federal taxes paid year to date is $23.58. Okay, so as you put in all your numbers, it's bringing up different scenarios. It says, select the one that applies for you. Well, by talking to the Johnsons a little bit earlier, okay, I don't have that. Okay, we took down little notes and we just took notes when we had the conversation with the people. Okay, in that, they are not contributing to a 401k. They're not contributing to a health insurance plan. The spouse or me will not get a bonus. I didn't get a bonus. My spouse didn't get a bonus. So you just click none of the above. Now you got to show the second source of income, which is very much the same thing. Okay, now you're going to do it for the spouse. It's an hourly job. She plans to have it all year long. She also gets paid twice monthly. So we'll go back to September 15th as her last paycheck that we're looking at. Okay, will that be a good representation? Yes, it will be. Okay, so now it says enter the wages for her job. So her gross was $2291.67. So for her, we use $22.92. We just round up to the nearest dollar. It says enter the wages earned year to date for Mrs. Johnson. In September, it's $41,250. So you lay that $41,250 there. And I hope I'm not going too fast when I grab those numbers, that you're actually seeing where I'm getting them from. Okay, based on the information provided, it looks like she's going to make $55,000. Is that correct? Yes, it is. Okay, so now we've got to do the federal tax on that. The amount of federal tax per pay period is $156. Found it over here. because you lay out the $156 per pay period that she pays in federal tax. Enter the federal tax year to date, $27.91, rounding up to the nearest dollar. Okay. She also did not contribute to a 401k, a health insurance plan, and not planning on getting any bonus. So we'll go none of the above here. Then they ask one more little question. Do you have any other source of income? Okay, in this case, there is no other source of income, so we'll click none. Okay, and then go to next. Then they're going to ask you about the adjustments to your income. The Johnsons didn't have any student loan interest. They had no educator expenses, no deductions for an IRA, the health insurance plan. They didn't pay alimony. So they get no adjustments in their while they're filling out their estimate. So adjustments entered 0. Okay, now standard deductions. We all know that on the schedules on the 1040 form, your standard deduction will reduce your income by X amount of dollars. They happen to qualify for standard deduction, which is going to be $25,900 for the year 2022. So they're going to just opt to take the standard deduction. If you do itemized deductions, you have to come up with a lot of different itemizations, but the standard deduction will typically take care of everybody. So we're just going to use the standard deduction. Click next. Tax credits. Child and dependent care tax credits. Okay, they have 2 children, so they're going to say, how old are your children? You have one, and you have another that was 10. One that was 7 and one that was 10. Okay. Child and dependent care tax credit. Enter the number of qualifying children for child and dependent care. They've got 2 kids, you want to lay out 2. Enter the amount of qualified work-related child care expense. That was $6,500 for the year. So you enter $6,500. Earned income credit. Maybe the Johnsons don't know, do they qualify for earned income credit? But it's worth a shot. So let's just put 2 kids in there, and the system will correct it or find it and correct it if they're not able to receive that. Okay, any adoption credits, foreign tax credit, education. None of the other ones apply to the Johnson situation. So you'll click next. And you'll get your result of what's going to happen with your taxes all year. Okay? You notice that they have a tax refund of $3,279. I know it says $3,274 on this side, but we're just estimating. This is an estimator. So $5 is not going to make any difference. Okay? The results will show that if you owe or receive a refund, the Johnsons will have a tax obligation of $38.84, which that's your anticipation there. And the Johnsons will pay $71.63 in taxes. So it gives you the total amount that you paid in taxes all year long. And this is going to result in that refund. You get a refund of $3,274 because you gave the government more money than you needed to for the entire year. They're going to give you back a refund. They're not going to give you any interest on that refund. They're going to say, thank you for letting us use your money during the year, but here's what you overpaid. They're not going to thank you where they're going to give you any interest for the use of your money. No banks will do that, but the government will. Okay? So, being that, well, let's before we go here, if you're satisfied with that, okay, it's telling you, if you're happy with your results, then you don't need to do anything. Just leave it as it is. You're happy with your employers taking out X amount of dollars, you're going to get your refund of $3,200 at the end of the year. But the Johnsons happen to be with a myEcon associate, and they learn about the advantages of investing and owning a home-based business. They decide that they're going to take that refund and invest it into their 401k. Okay, the Johnsons click on the income and withholding tab. Let's go back up here to the top, go to the income and withholding, and you notice there it is right up here and right there. And Mr. Johnson changes his answer. So he's got to go down here, locate that area where he said that he's not going to do anything, and he's going to invest into his 401k. How much is he going to invest? He's going to put the whole $3,279 in. Okay, I won't do it per pay period because this is at the end of the year when he talked to us. It's about the third quarter. Okay, so instead of getting that refund, he's going to take that $3,200 and put it into a tax-deferred vehicle. Okay, so we understand that. While talking to the myEcon associate, he's going to learn the advantages of that home-based business. Okay, and the Johnsons click on the adjustment link. And we'll go here and go back up to the adjustments. He clicks on the adjustment links and estimate that they will have a $5,000 in Schedule C business losses. Now, we just suggest that in the conversation, but we show people how to make a record. We show them how to use the cash flow manager. And that $5,000 business loss is not as bad as it seems. Okay? So he's going to change his answer here. And he's going to take certain business losses. We're going to add $5,000 in there. Okay, you click next here and go to the results and see what kind of change those two things have made. Okay, when they click results, they're going to receive now a refund of $4,270. Okay, $4,275 was in the example. Now, if you remember, before they made those adjustments, they got $3,279. That's almost $1,000 extra by making those two adjustments. $1,000 more in a refund by making those two adjustments. Okay? So, if you're happy with the results, you do anything. But you got to realize that you're in the third quarter, the end of the third quarter. You can't do anything about the money that you've already given the government, but you might want to bring home some extra money into your paycheck by making an adjustment. Say you take a $2,500 adjustment. It's going to show you how you can change your W-4 form and receive additional money back into your household per pay period. If Mr. Johnson were to do it, it'd be an additional $262 per month. It'd be an additional $262 per month that you bring into your household. But if Mrs. Johnson were to do it, she'd bring home an additional $312 in their paycheck. So how do you do that? Click the button here. And you look down in step 3, it gives you form W-4 already pre-filled. Okay? So when you get that form W-4 already pre-filled, you notice that inside here is where those numbers will lie. But remember, okay, that the employer has to take whatever number is in there, regardless of what numbers are on the left of step 3. Okay? And also remember that you'll only do this for one of your jobs. All right, so now that's my rendition of the W-4, and if anybody has any questions, would you please feel free to ask.